Digital is an enabler, and we are talking about simplification of all of these things. Now, we've talked about balanced funds, equity funds, but real estate, that is an area where people don't always understand how to make the most out of it when it comes to long-term creation. So, Anthony, you know, for very many people, the only thing they think about when it comes to real estate is maguta, maguta. You get a plot here, another one there, but there's so much more to understanding real estate when it comes to wealth creation. So take us through how real estate can really be a tool for wealth creation in the long term.
So thank you, Claire. I think if you look at real estate, from an investor positioning, I think what you really need to think as an investor is first the purpose of what you're picking. Because the use, most of the market, we concentrate on maybe you're just buying for use. You can buy for rental basis. You can buy for holding purposes. So once you're able to map out what is the use, then you're able to then position your real estate investment accordingly. Because depending on the use, there are factors that you then take into consideration. In the current market, there are very innovative financial structures. So when you think of real estate as a home ownership, then how about affordability? When you're selecting that asset, do you want to know your range of what you want to invest? Then once you know the range, you then need to plan your cash flow so that the asset that you then pick aligns to your cash flow. And with that cash flow thought process, then it brings to then exploring what are then the flexible options of coming and owning that. You see a lot of developers currently are offering flexible payment plans if maybe someone is picking a residential asset. We are seeing a lot of creativity around the market, especially in the coming year. We'll see investors introducing D-rates in the market where you can actually invest at the onset with an institutional developer, and then you are able to enjoy that upside. We are seeing a lot of creativity. Maybe one of our subsidiary at Centum called Triffic, Two Rivers International Financial Center, which is an SCZ-backed entity, will be positioning a dollar I-rate in the market next year. What does that mean? When it's an I-rate, then it brings that ability to even fraction real estate to tunes of even $1,000, you know? Not where we thought that you still need to buy a plot, hold on it, and then flip. If you buy or invest a structure like that, the I-rate gives you recurrent income. There's dividend. This is something that even if, in terms of even liquidation, even if you wanted to then convert this asset to money, the exit strategy is clear. So long-term positioning of real estate is purely based on the personal assessment of what you want, and you always have to assess your portfolio. We always advise that you have a balanced portfolio, such that if you look at most of the richest guys worldwide, you'll notice real estate as a portfolio occupies between 20 to 40% of the asset.